Vincenzo's Gold Crypto Investing is September the 23rd, 2025, noontime cryptocurrency update. You can see the US dollar isn't doing anything today. It's trying to mend some of the wounds that it's been hit and beat down and assaulted, brother, lately. The gold futures are at a new all-time high, surpassing 3,800. Spot price is at a new all-time high, approaching 3,800 at 3,778. Silver is at greater than a 15-year high, now approaching $44.15. B2 gold is about to hit $5, right? We're approaching 70% up on the position. And we're going to show you, and this is what the value of long-term steady investing and being debt-free while investing into assets that you understand over a long period of time, you start to reap the dividends, you start to reap the rewards, you start to see the hard work pays off. And look at some of the percentages and some of these miners that we have that were up. First, Majestic Silver, and you'll see some of these companies twice, but look at the shares above the dollar amount because I have them in two separate sides. 97.92% up, or $4,400. B2 Gold, 70.49%, $1,100. Fortuna Silver, 70%. Kinross Gold, 368%. You heard that correctly, 368%. Did that all happen at once? Absolutely not. You become an asset millionaire with my game plan, my playbook, and my fortitude and execution by steady, long-term investing into various assets until you can make appreciation in several different assets. And that's really the way that you have to do it. You can take a look at Pan America Silver. It's up 113%. Rivion's up 30%. Silver Corp, we just made a massive purchase, I told you 2 weeks ago. And last week, we bought 1,000 shares of Silver Corp before the train left. And we're up over $1 a share almost now. And then you can see some of the other ones on my retirement side. First Majestic, 85.83%. Barrick Gold, 93.92%. B2 Gold, 68%. And then Fortuna Silver on this side, 20.8%. And that is the asset classes that we outline and why it's very important. And time hasn't run out, but time has almost run out. You have to be educated. And I believe to be financially set in your future when you retire, you have to have $1 million minimum in 3 different asset classes. Real estate is one. Gold and silver, bullion, and mining stocks along, and you can add in with that foreign stocks to that are another, and then a 401k. And then you have 3 completely different asset classes. You have stocks and mutual funds. You have physical gold and silver, bullion, mining stocks. And then you have real estate. And then cash. That would be the 4th one. You don't need $1 million in cash, but I would have 20% of that in cash for peace of mind and things you need to do. But that's the power of steady investing. Our 401k is eclipsed $114,000, and we're on the road to $120,000 there. So we're doing very, very good building assets, and there's a reason you need to build the assets. And if you look at the Bitcoin price, it's been under a lot of sell pressure recently ever since the Fed rate cut. It's been selling off as it was trying to go up, but it was selling off leading into the rate cut. And because you can see we've been on this area where we've been threatening to break down out of a 3.5-year rising channel, and that is a very, very critical, critical thing if that does actually happen. If you do have a technical breakdown and you do have a structural change of the overall market, because this would have a very, very bearish thing happen, a very, very bearish sentiment that could take place, as you would have these underneath targets start to come in, the 200-day moving average, then that critical $95,000, and ultimately a retest of the 79,556.27 would be plausible if you confirm a breakdown out of this rising channel. And you can see that that would be a 30% correction, which is a very healthy correction in Bitcoin. But you can see what we highlighted here several weeks ago, and let's see if we can't yeah, that's bright enough. You can see where the step down fashion that we were talking about, as you ran up into this, right? You've confirmed support, resistance, then you overshot, came down to lower support, then came back up, but it was lower peak potential, yeah, you had a new all-time high, but it didn't overshoot it by as much. It just came right up into there and then got rejected. And then we actually had a brief fake out down here back in the springtime. And then we pumped back in on this most recent pump. You can see it only came up just going up and sideways along the rising channel support. We were up against resistance, and we actually blew quite a bit of ways over until we came back in. This time we only came right up into it. The third time we only came along it, right? We didn't really get back into it and push very high and come anywhere near upper resistance. And I was talking about that the last month or two. Is that a step down fashion? Is this trying to give us something and read the tea leaves in between that? And that's something that we're paying attention to now, right? So that's very, very important. And we're going to continue to watch that in the Bitcoin price. If we take a look at the XRP, you can see the XRP got heavily rejected, something that we told you would more than likely happen. If you got rejected by there, the more than likely happening, what I'm saying is you would come down to the 100-day moving average, and I thought you would break that, and you would eventually end down on the 255 major underneath support. And that's still very, very possible if you can break, if you can't hold this 100-day moving average, because right now it's playing according to plan by failing again at that 307. And I think that's where you could come down to. And then there's something else that we've been talking about, and we talked about this back when the price was coming in a bearish consolidation here, where we thought there was much lower potential than the wick low of $1.61 that we hit. But now you could be having this mountain double top where this neckline support is $1.62 major support, but the neckline support of 213. And that's something that we're watching out for, because this could come down there and could, in a worst case bearish scenario, could come down to $1.20 in the XRP. Not saying it's going to come down there, but I'm saying it's something you should have in the back of your mind as a possible golden accumulation zone. But right now, if we break this 100-day moving average, we are going to come down like we were talking about for the last several weeks when we were meandering up here, and even before that when we were meandering back down here after we were looking like we were going to not be able to hold that 307. We were saying if we continue to stay below that 307, eventually these underneath moving averages would break and the price would end up back at the 255, which is the pattern support. Because if you break that, then you would be looking at potentially a structural change like the Bitcoin price of the overall underneath tone of the marketplace, and that would bring you down all the way to 213. So that's something that we're watching out for. And these underneath major support levels are the 50, which you're below, the 100 and the daily, which you're just above, and the 200, which you're above, are something that you have to watch. And that 213 is a weekly time frame moving average. The 50, the $1.62 is the 100-day, and the $1.18, which would be fitting a technical target. And we'll talk about that on another day as the circumstances present itself and get itself on the playing field. But that is the 200-day moving average in the weekly time frame. So there are multiple areas that do line up if we do eventually go bearish in the XRP. And something else that is a reason that you need to join the channel. It's free. Hit the subscription below. It helps push us through the YouTube algorithm and get us our truth, trust, education, and information into the ears of more and more people to help them change their financial future, to get them out of debt, to keep them out of debt, and to get them steadily investing into assets that they understand, steadily in investing to change their financial future, to generate generational wealth and keep it, to pass it down to their family after they perish, and their kids, right? And it's free. And if you want to help support the channel, it's $2.99 a month, $3.99 a month, as cheap as that. In the video description and/or pinned comment, to keep these daily videos coming for free if you've learned and got educated. And one of the things we invest is we buy asset appreciating things, because we understand here that we're in a chronic, before I was born and long after I'm God lets me walk this earth, if you have a fiat currency, like the world is on fiat currencies in the United States, where I'm at, it's a debt-based economy. They will chronically inflate assets and deflate and debase their currency, right? By debasing their currency, which is inflating the currency supply, which blows up assets. That's what they're going to do. So we buy assets that go up under those conditions. And one of those assets are gold and silver bullion and commodities, along with the mining stocks that correspond with the set commodity. And you can see the latest World Gold Council and related sources. Here are some of the central banks that have been buying the most gold recently. And you got to ask yourself, if a central bank is buying gold, why aren't you buying gold? Why is the central bank buying gold? And why isn't the United States central banks buying any bullion and are not on the top 5, top 10 list? China, the People's Bank of China, is one of the largest buyers of physical gold bullion, and they have been for years. They really started ramping up a couple of years ago, and they've continued that ramp up, and they've continued the buying of the physical bullion. Poland, National Bank of Poland, is amongst the top. Turkey, significant accumulation in recent years, and you can have the links, World Global Council. India, and we all know Indians love gold. Yeah.
You need to clean these mirrors.
Not cleaning shit.
Because you're supposed to be parking straight.
Yeah, I don't.
Fucking crooked. That's why nobody can park.
Ah, fuck all of you. I park the way I want.
Can park here
because the shop man
got everything fucked up.
Because the shop manager fucking says he's gonna park parallel.
That's why I'm leaving it. Now, look at me. I'm parked right on the line.
I know you always park in the same exact spot. The rocks are in the same spot. It's insane. The People's Republic of India, the Czech Republic, Hungary, Serbia, Georgia, Bank of Ghana, right? Gold and silver prices, because the central banks, and that's been driving the demand and the appreciation into the record highs seemingly every day this year in gold and silver. Our central banks buying physical bullion, right? And gold is trading just below 4,000, silver just below 50. And there's a thing that happens when you start buying physical gold. The people that are trading it on paper via options or leverage or shorting it, they start getting blown out of the water. And when you have a contract, like you have a put on physical spot price, if it's a big put, the guy on the other end of that, if he wants to take physical possession of the bullion, you got to give it to him. And if you don't have it, you got to go into the open market and buy it. But those are starting to get blown out, and that's going to cause a short squeeze, right? We all know about short squeezes, and we're going to have the biggest short squeeze in silver history, and I believe it's already started. And that's, I believe, what started at 40, and why the price going from 40 to 50 is going to accelerate, and from 50 to 60 and 60 to 100. You can see the United States is at 37.78 for gold, the ounces. But look at India. Even though they buy a bunch, it's 333,000 of their money if you live there, because they've debased and devalued their currency so much. What is the silver squeeze? The silver squeeze happens when investors collectively buy up physical silver coins, bars, bullion, with the goal of creating a shortage that exposes the difference between paper silver contracts, ETFs, futures, physical silver, real ounces, and vaults. The idea is if enough people demand delivery of physical silver, is what's going on with the gold and silver bullion market with the central bank buying. It could reveal that there isn't nearly as much real silver as there is on paper, which is absolutely true in both metals, because they've been manipulating the price down for decades, because they had to make it look like inflation wasn't as bad and the economy wasn't as bad. But those are getting blown out of the water now with the central bank buying, and everyone's lost confidence in fake Fugazi fiat currencies. That's right, fake Fugazi fiat currencies, and that's what it is. God's money, gold and silver bullion. God's money, gold and silver bullion. Paper silver refers to the financial instrument that, given exposure to silver price without owning physical metals. Examples: future contracts, COBEX, CIB, etc. ETFs like silver, I trust silver. Unallocated accounts at bullion banks. You have a claim on silver but not specific bars. The issuer in the future ETF market, there can be hundreds of ounces of paper silver contracts for every silver ounce of silver that actually exists in vaults. This creates artificial supply, suppressing price, which VINCENZO'S gold crypto investing has been promoting and educating and giving out the information for years on why this was going to be a generational wealth transfer once in a lifetime in the silver bullion market. And I believe in real time this is taking place right now. This creates artificial supply, suppressing price because traders can just issue more contracts instead of sourcing real physical bullion, right? How the silver squeeze happens, 2021 example. In January 21, inspired by GameStop short squeeze, retail investors on Reddit Wall Street began squeezing for a silver squeeze. People rushed to buy physical silver. Bullion dealers like AMPX, JM Bullion, SD Bullion quickly sold out of silver coins and bars. Premiums on physical silver went up above spot, shot up 30 to 100%. Silver and silver ETFs saw record inflows. Comex had to reassure the market it had enough silver in the vault, but the paper market absorbed most of the pressure. Price spiked only briefly to around $30 an ounce before falling back. Why paper silver matters. The existence of paper silver allows the illustration of abundant supply. If 200 people held contracts for the same 1 ounce, only the first person who demanded the delivery gets the silver. The rest gets cash settlements. This suppresses price because sellers can flood the market with virtual ounces. What causes a true silver squeeze? A massive physical demand, industrial use, solar panels, EV electronics, retail investors, all demanding silver. Loss of confidence in the paper markets, which they have. Investors demanding delivery instead of rolling over futures, which will start. Supply bottlenecks, which are there. If that happens, silver price could decouple from paper market with physical trading at a much higher premium. Paper silver contracts and promises, not metal. The silver squeeze happens when too many people demand real ounces, which are happening now as central banks continue to buy. 2021 showed how fragile the system is, and that wasn't when central banks were buying, and now they are. And I believe this is going to be a generational wealth transfer. Time is running out. You must get on board and understand how to invest in asset appreciating things in a chronic dollar depreciating world. Peace and love. The Rock's Eyebrow, Jay.